Okay, good morning, everybody. The day after the Super Bowl, here we are, February 12th, 2024. My co-host Aaron Wise and myself, John Mooney, kicking off another Mortgage Monday call. Just repaving. We do these calls the second and fourth Monday of every month. So thank you again for joining us. This is the goal is to be done with this call in 20 minutes, okay, and give you guys an update as far as what's happening out there in the marketplace in regards to interest rates, loan programs, activity, even home prices, some stats and stuff that come out from articles over the prior 2 weeks. Aaron and myself combined have probably 42, 43 years of experience in this business. We're grateful to have you on the call today. We want you to participate, ask questions, give scenarios, anything that you guys might need. Feel free to bounce it off us. Aaron, anything I forgot before we get into the agenda?
Nah, that's it. Just the most important piece is this is a fast moving train, as we like to say. So I feel like a nice little quick brush up every couple weeks on what's new, what's relevant, and what can be helpful to you guys as agents out in the field is primo information. So we're here to push that out to you. So here we go.
Outstanding. Thank you. So just getting started here. So we did a live webinar with Lawrence Yun back on the 25th. That webinar was recorded and is available. So we will get out that recording to you folks when we get out the notes from our call. It should go out later today. But it was a quick, focused 30-minute call on what to expect in 24 from a market rate, home appreciation perspective. So just to give you a couple of quick highlights there, mortgage rates are expected to be in that 6 to 7% range for probably most of the year. I'd love to get down to somewhere with a 5 handle, 5.8, 5.9 by the end of the year. We'll see if that happens. But current rates are helping affordability as it's compared to where they were last fall. So if you guys remember, the market was around 8% on a 30-year fixed at this peak back in, say, October, okay? Even in, say, the mid to high 6s right now, that's actually helping affordability. We expect more home buyers to return to the market in 2024. Last year was probably a 28-year low in terms of home sales, okay? So that compares to 1995.
You guys have the offer right now?
Back in 1995, there were about 70 million fewer people here in the United States. So going into 2024 here, they expect that number of transactions to increase by, say, 15, maybe 20%, okay? Aaron, anything you want to add from Lawrence's webinar?
I think the big takeaway for me was we've all seen these probability graphs and charts about, the elephant in the room is, all right, when is the Fed going to make the move, right? That's really what everybody wants to know. And what we've seen based off what they said, based off of, Jerome Powell's, 60-minute interview, which, if you happen to get a couple minutes, I think that's good to check that out. You can just Google it. I think what we're seeing here is the economy's still burning hot, relatively speaking, and that's pushed away the odds that the Fed is going to go ahead and decrease rates here in this next March meeting, which puts us, the next meeting after that is May, right? So I think what we're going to see here is the next, let's call it, March, April, May, I don't know, 70 days or so, we're going to be hovering in this zone. And the only thing that's really going to affect that zone is, and we're going to talk about here in a minute, which is inflation and jobs. So I think if I'm an agent and I'm out in the field and I'm just trying to kind of gauge what's going on with real-time information, I'm just paying attention to those 2 or 3 reports that are coming out. Obviously, we'll push that information out to you guys when we expect it to come due. This might be a good segue into this, but tomorrow, the CPI reading that's going to come out That could go either way. I mean, I'd see experts saying, listen, if this comes in hot again, that's going to push our range again. And it's going to pop rates up a little bit. So our full, or at least my full advice is lock them if you got them. And again, this kind of goes directly into our next, segment here, which is it can't hurt to lock. Okay, so if you've got customers that are out there and they've got something under contract, I've had a couple people tell me in the last few weeks, I don't know if we're ready to lock yet. We feel like rates could get better. I don't want to say that's the worst thing that you could do, but that's just not a good idea at this point. And the reason for that, and John, you can speak to this too, is most loans that we have this float down feature on them. And, every consumer that I talk to, I'd say 99 out of 100 has no idea what this means or if this is even, kind of what this is. But what I can tell you is, let's say we have somebody that's under contract today. We lock their interest rate today. There's only 3 permutations of what can happen with rates. They're either going to go up, they're going to go down, or they're going to stay the same, right? And if we see, inflation is still an issue tomorrow, and we see rates pop up, an eighth quarter of a point, but you've already locked today, you're good to go, right? If we see nothing happen and it's a non-issue, you're good to go, you're locked, non-issue, right? If we see that inflation has calmed down, and I'm just using kind of general terms here, and we see over the course of the next week, 2 weeks, interest rates, dip, we could call it a quarter, we could call it 3/8, whatever it is. We have this float down feature on this loan where you can go and you can grab that newer, lower interest rate, even though you're already hedged against rates going up. Okay, so to me, it feels like the best of both worlds. It's, you're locking in a price. It can't get worse. It can only get better as long as we're within 30 days of that closing. We can go grab that newer, lower rate. So really, there's no, in my opinion, with all this volatility in the market, there's zero reason to not lock a rate if you have the opportunity to. So what am I leaving out here, John?
No, I think you're making a lot of sense. And, again, when we lock, we're basically locking the ceiling, but not necessarily the floor.
You got it.
So
Yep.
in this market, there's, it's really hard if you're a consumer and you're trying to time the right time to buy with the price that you want and the house that you want and the neighborhood that you want, as well as trying to time the best time to lock your rate within that short window. It's just really hard to do. Okay, so our float down allows people to lock that ceiling so they're protected, but still keep your eyes open for that opportunity to drop the rate by a quarter, whatever it is, within 30 days prior to close. Okay.
Yep.
So, just like everything else we talk about, educating our clients here is the name of the game, right? So if you're referring Aaron or referring myself, know that we're going to have these conversations with them and say, hey, you're under contract. You can lock today. This is what the number is. If we get better, we'll float it down to you before closing. Hey, by the way, there's an unemployment report that's coming out the first Friday of the month. There's a CPI number that's coming out tomorrow. These are all the things that'll factor into that client making the best decision for them. We provide them the education and that ability to make the decision to put themselves in the best position possible. Okay. In the survey that we were reading that came out from NAR, mortgage rate optimism is high. People think that rates are going to be softening going into later this year. And the sentiment from the consumer is improving there, which is great to see. Okay, hopefully it'll bring more people out into the market. But at the same time, consumers feel that it's a bad time to buy a house. Okay, so I feel like that's where we have to come in and educate, right? So, is it more expensive to buy a house today than it was 2 years ago? Absolutely. But the people that are buying in 26, 2027, 2028, they're all going to wish that they purchased in 23 and 24. Okay, it's because values are going to continue to go up, and we'll talk about that more in a second here. But again, like I'm sure many people wish they'd have purchased in 2019. Today, the people in 3-4 years are going to wish they purchased today, right? So I'm gonna share my screen here. This may be a little tough to see. We will send this out to you guys, but I just wanted to point this out here. So this may be tough to see. I'll try to make it a little larger, but this is a report that came out that went through the last, well, every real estate market going back to 1942, okay? And this illustrates the change in home value over a 10-year period based on the year that you bought, going back to 1942. Every single year, with the exception of 2006, okay, you made money purchasing your home at the 10-year mark, okay? So, you know, in 1942, in 10 years, your home was worth 153% more. Even looking, you know, back in, 2013, 2014, these are, 10 years ago, the most recent stats that we have, the house is worth 105% more 10 years later if you bought it in 2013. It's worth 98% more if you bought it in 2014, okay? So the media does a really bad job of educating the people as to what's out there in real estate. So it's our job to make sure they're seeing this stuff, okay? So again, it's not timing the market from a price perspective, from an interest rate perspective, it's time in the market, okay? So, it's our job to make sure that people see the truth, which is home ownership is still an incredible investment. Not only do you have the benefit of the increased value, but you have tax benefits from paying mortgage interest, property taxes. You get a better refund when you file your taxes. You've got, amortization. You're making that mortgage payment every month. And yes, the value of your home's going up, but the balance on your loan's going down, okay? For someone that's choosing to stay renting right now, they're never getting a return on what they write their check for that monthly rent payment every single month. It goes out the door, you never see a penny of that back, okay? So just wanted to point that out, and I'll send this out as far as with our notes and our agenda here once we're off the call, okay? Aaron, anything you want to add in terms of timing / time in the market?
I just think it's almost impossible to time things out. I mean, we in the industry, have tried to time it out ourselves with when to buy a place and exactly when to do everything. And I feel like if we can't time it out perfectly and we have, 20 years apiece doing this, it's just impossible. So all you can do is the best you can, I feel like. That to me, it's about getting the right information to your buyers and sellers. I mean, I'm just amazed at how many, and not to go off too much on a tangent here, but if you're a good rock solid agent right now, you've got the upper hand. I mean, I talk to a lot of people out there, guys, and there are so many people that are just not going into this level of detail with their buyers, especially buyers right now. They're just not talking to them about tax benefits. They're not talking to them about how to do what it is they're doing. They're really just trying to get them excited, get them pre-approved, and get them out in the market and saying, hey, listen, you got to go strong, And I just feel like there's such a bigger picture with what's going on there. It's just the perfect time to educate people. It takes a little extra time on our end to do that. It takes that extra 15, 20 minutes per client minimum. But, I'm looking at some of these names on this call, and these are the right people that are doing it. So I just feel like if we're on this call, we've got the upper hand. We just need to make sure that we take that little bit of extra time to explain some of these things, and we're going to be elbowing out some of these other agents and offers. So that's what I'm thinking.
Totally agree. And again, I think it comes down to empowering the customer, educating the customer, giving them options. Because, again, real estate, buy and hold, you're always going to win.
Yeah.
Right? Okay, so a couple of quick hits as we get through the rest of the agenda here. By the way, any questions, scenarios, stuff that you want us to speak to, feel free to throw it in the chat. We'll get through it here before we wrap up the call. So getting back into, we've talked about this before, but soft pulls on credit and trigger leads. Okay, so in the spirit of preparing our buyers and educating our customers, it's never too early to have these conversations on what they can afford, what the numbers look like. I was getting calls on Saturday and even first half of the day on Sunday. People are out there making offers. Hey, what about an escalation clause? What's my payment at 700 versus 725? Okay. It's never too early to have these conversations with our clients. And we use a soft pull on credit. Okay. So the biggest objection that we would typically have for someone that's looking to purchase a home this year is, well, I don't want to have my credit pulled yet because I think that hurts my score. Okay. Number one, that is a gross oversimplification. It's a myth. Mortgage inquiries don't hurt your score the way other types of inquiries can. Okay. There's reasons for that. But when we move to a soft pull on credit, there's zero effect whatsoever on the score. And we can have a pre-approval conversation. We can run different scenarios with that soft pull. Okay, so there's no downside to having the conversation and getting those credit scores now, even if they don't plan to purchase or go see homes until July or after the summer. Okay. In order to get a file through with our underwriting department, we have to have a hard pull on credit. Okay. More so than damaging the score, what a hard pull will do these days is it may open that client to getting spam calls from chop shop, kind of online, call center lenders. Okay. We educate our customers on that. They can opt out of that. We show them how to do it online. They fill out a 5-question form online and it protects them from those spam calls. But the credit bureaus, TransUnion, Equifax, and Experian are selling that mortgage credit pull to our competition. Okay. So there's actually a petition that will be in our agenda. I think this is terrible. I don't think the credit bureau should be able to sell our clients' information without their consent. So if you agree, go ahead and sign the petition. Hopefully our representatives will do something about this at some point. I think they will, but it's never fast enough, right? So again, never too early to have that conversation with the soft pull, see what's real. That way, when they go out on showings, they're prepared. They can be decisive and move quickly in support of you guys. We offer reduced interest rates. Okay, so generally guaranteed rate is a high volume, low margin shop. Okay, there are lenders out there that make more commission per deal than we do because we want to offer more attractive rates to our clients and have those clients refer us and build our business through referral, just like you guys are, right? But the rate reduced program helps with affordability. There has never been, in my 20 plus years of doing this, there's never been more first-time buyer rate reduction programs out there. Make sure you're talking to Aaron or myself if you have a buyer or even if you have a listing that's going live. A pretty cool thing to put in the listing is, our lender partner offers reduced interest rates based on this particular address. Okay. It may be eligible for a half or a point below market interest rates if it's in a certain census tract, or if the customer is under a certain income threshold. There's also down payment assistance available on these programs as well. But there's probably about a dozen of them. If I were to rattle them off, guys, the Home Run program, Community Lending, Home Ready, Home Possible, Borrow Smart, the Special Purpose Access program. And that's before we get into Chenoa and IDA and all the down payment assistance stuff as well. So we are an open carrier platform. We have 40 different banks and credit unions that all have specific loan programs with ability to qualify with reduced interest rates. So if your client is talking to Aaron, myself, or anyone at Guaranteed Rate, they're getting the best price of 40 different banks on any particular day. Okay. So the call to action, get us in touch with your clients early. We'll educate them. We'll get them prepared to go on showings. if you have listings, shoot an email with the address. We can let you know if it's eligible for the program. And then just again, the 2 to 4 unit properties, okay, on the conventional side is eligible for a 5% down payment. Okay, if we were talking end of last year, a 3 to 4 unit property, you'd have to put 25% down. Now you can get in as little as 5% as long as you're going to occupy. Okay, so those house hackers, those first time buyers that living with the bros, maybe roommates or they're renting, whether they like it or not, they're paying somebody's mortgage, it's just not their own. Okay, so let's get them approved. Let's get them into a situation where they can buy a 2 to 4 unit property with 5% down, make some money. Aaron, anything I'm forgetting here? Anything else you want to add before we start wrapping it up?
Yeah, I think, you know, the special purpose, special access stuff is really important for a couple different reasons. I think it softens the blow of other issues that happen within a transaction. So if your buyer is purchasing and, you know, they're getting, I don't know, half a point better on a rate, or they're getting $4,000 lender credit from us because it falls in a certain area, the color of the carpet in the bedroom is much less of an issue. Do you know what I mean? It just makes, I just feel like it helps bridge those gaps sometimes. You know, sometimes we have transactions where you've got a buyer and a seller that just can't seem to get it together. You know, you're a couple grand apart one way or the other. And, you know, how great is it when you can go to that buyer and you can say, hey, listen, I know you're a little far apart, maybe $3,000-4,000. You're purchasing in a census tract over in, you know, ABC neighborhood. We can give you $3,500. Does that soften the blow a little bit? And I'm telling you, if we're trying to find ways to differentiate, keep it together, keep buyers and sellers, you know, eating at the same dinner table, I feel like that's just a huge, huge way to do it, number one. And number two, you know, we give buyers a lot of credit a lot of times for knowing a lot of things, doing a lot of research, et cetera, but there's just so much information out there, guys. I mean, if you look up on the internet, you know, one term, you're going to get 4 different definitions, right? So think about it. If you're not even in this industry and you're just looking to try to gather some info, it can be super, super difficult. Okay. Good example. Somebody calls me this weekend and they say, hey, listen, I got a pre-approval with Chase. They're offering 6 1/8 on a 30-year loan. I'm like, 30-year loans aren't at 6 1/8. What's going on? Is it in a special area, et cetera, et cetera? They forward me over the letter. Chase is charging 2 points out the gate to get the rate. Okay. Now this is somebody that makes, you know, $350,000 a year, 700 credit score. You know, I don't know what the right words are to say here, but we got the perfect buyer that's looking to buy, super educated across the board, and just didn't notice that they're getting charged $8,000 in discount points in order to get a reduced rate, right? So 2 different points. You know, number one, we're here to educate them and talk to them about those things, because we can look at something and, you know, to a buyer, it might look like, you know, German or French, but for us, it's right down the middle. And then the other thing is, let's keep, you know, the buyers and sellers together. If we can help do that, this is an easy way. We check the address, good to go. Obviously, you're not having a problem selling your listings right now, but every little bit helps. And if that tide turns eventually, it'd be nice to say, hey, listen, if it's between my place and the one down the block or across, you know, the city, this one's going to give you $3 grand. That one's not. I don't know. Maybe that's going to be something that's going to turn the tide for your listing versus somebody else's. So just want to chime in there.
Absolutely. So Michael is not only on camera, but threw a question into the chat for us today. So thank you, Michael. We appreciate the participation. What incentives are available for new to 4 unit investors? Okay, so the down payment assistance, that kind of stuff is typically not available on a non-owner occupied property. But if they're occupying, we can get them the rate reduction if the property's in the specific census tract. Okay. But if they're not gonna occupy, the down payment assistance stuff is generally not on the table, okay? But the reduced interest rate could be, depending on what program, depending on the specific area. Okay? So thank you for that. Okay, so listen, we are coming up on 27 minutes on the call here. We're gonna wrap it up and we're gonna get out the agenda and the notes to you later today. Feel free to forward this on. If you have agents that you're tight with that would get value from it, the more the merrier. We appreciate you being on the call. Aaron, anything you want to say before we wrap it up here?
Nah, let's just have a good week. There's a lot of momentum out there. It's Monday, sun is out. Let's go.
Thanks for joining the call, everybody. We'll see you in 2 weeks. Have a great day.
Thanks, everybody.